Welcome back, my beautiful friends. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York. I am your host, Zen Sams. Now, coming up in our innovation and tech segment, brought to you by Caldwell Soames, we have returning contributor Paul Caldwell, who is chairman and CEO of Caldwell Soames. And today we are chatting Nvidia and Omniverse, which is a new scalable multi-GPU real-time reference development platform for 3D simulation and design collaboration. And we're going to talk about this amazing revolutionary platform with Paul. We're also going to talk about crime and NFTs, wash trading and money laundering on the blockchain and its constituents, what makes this emerging asset class hack prone, and how do we stay ahead of the curve? Now, data from the block data dashboard, right, shows that in January of this year alone, the NFT transaction volume reached 6.13 billion. And then we have data from the block research showing that for the whole of last year, the transaction volume of NFTs exceeded 13 billion, right? So trading volumes in January of 2022 alone were nearly half of what they were all of last year. This is very, very telling. Now, NFT is mainly supported by digital artworks and collectibles generated on the blockchain. And there are also many legal risks in the increasingly large market, right? Multiple reports have pointed out that the NFT market has risks such as fraud and the money laundering, and that these technological innovations are bringing on potential money laundering risks. And criminals are using illicit funds to buy NFTs and transact with themselves, create a record of the sale on the blockchain, and the NFTs can then be sold to unwitting individuals who will compensate the criminals with clean funds that are not related to the crime. Now, in addition to money laundering risks, chain analysis also monitors wash trading practices that exist in the NFT market. Now, wash trading is a method of market manipulation, which mainly refers to the simultaneous sale and purchase of the same financial instrument by investors in order to create misleading conditions in the market. Think about that. Now, chain analysis tracked one of the most prolific NFT wash traders who has made 830 sales to addresses they self-fund. Now, by buying and selling on their own, the wash trader pushes up the price of NFTs. So what does this all mean for you and me? Well, here to break it down is my expert at hand. Welcome to the show, Paul.
Hi, Zen. How are you?
Amazing, amazing. What is going on here? Talk to me.
I think in many respects, what's going on is human nature is going on. It seems that in a defined environment with defined regulatory framework and like the stock markets, for example, there's something called a wash sale rule, and it's a particular rule that's designed to exactly and specifically address this particular issue that you mentioned. With this wash trading, as it is. This is the simultaneous buying and selling, as you said, of a particular asset, and it's a way to trade that asset, and it really can become a sort of a disreputable market making activity. And I say disreputable because it's really not the buying and the selling of an asset, one to another, you to me. I value it. You say, yeah, you're willing to pay that. Typical econometrics, simple stuff. And then you pay that, and it's okay. If I'm falsely making the market for a particular asset or group of assets because I can, and I do that, and then I say, hey, to you, hey, look, it's worth this much. That's what the world says, or that's what the market price is. Are you willing to pay? And you just happen to say, yeah, I'm excited about it. I'm willing to pay. That's one aspect of this.
So how do we mitigate this, and how do we stay ahead?
Well,
I mean, on the back end technologies, because there must be something.
There are technologies. I mean, you mentioned chain analysis
Yes.
in your opening, and Chainalysis is a firm that we work in our portfolio with our portfolio companies like Original Digital Corporation, ODC, and then the OG2D NFT marketplace, OGPay. We work with Chainalysis significantly in this particular area because they have the technologies that that can help this resolve or solve or prevent a lot of this type of crime, because they have configs inside their platforms. But still, their customer gets to set the management protocols in the configs as to what gets turned on or what filter gets turned off, or how lenient or how stringent do they want to be
Right.
on transactions that come in. So
It,
it's still up to the user. So it's still very much a buyer beware
Yeah,
situation.
I could totally see that. There was a report that Chainalysis identified like 262 users who have sold an NFT to a self-financed address more than 25 times, and it was a total of 110 of these users collectively made nearly 8.9 million in profit from this activity, Paul. So what you're saying is very true, and as long as we stay ahead of the curve here, I think that this is very much a buyer beware sort of, educate yourself. Now let's move on to Nvidia's Omniverse here, because there's something very unique and proprietary about this incredible platform, and it happens to live in one of your portfolios. Now, just to catch people up to speed, the Omniverse is Nvidia's simulation and collaboration platform, and they're delivering essentially the foundation of the metaverse, the universe of virtual worlds that are all interconnected, so to speak. Talk to me about why this particular company is extremely important during this time of Web3 and everything we have going on.
Well, Nvidia hasn't just been about innovation, although it's certainly an innovator, but it hasn't just been about that. We added it to our publicly traded enterprise fund years ago because Nvidia represents a company that gets it in the market. They get the market. They understand the market. And when they started building chips for cameras in cars, we realized that, well, okay, this is interesting. And then their order flows started to grow and these sorts of things. And that for us represents an opportunity. At Caldwell Soames, we live at the intersection of value as value investors, but also we're also looking for the upside potential of things. And so we saw a company that was well run, well managed. So we like Nvidia just overall. Some of its new items, its new entrance into the markets aren't just disruptive. They're not just innovative. They're actually transformative. They're transforming the way people think about how they do some things. Omniverse is a great example. It's for it's for creators. It's built for creators.
It's an incredible platform.
And what a great idea, right? When you have the metaverse, the megaverse, the multiverse, the omniverse. We have more verses.
Oh, I know. It's very
crazy.
funny. You're right. We have tons of verses, and at least Nvidia's Omniverse. This is truly one of those platforms for simulating and connecting to virtual worlds. That's the entire foundation, right? And in the world of Omniverse, digital content designers can meet virtually to develop really essentially complex 3D content in real time. So this Omniverse obeys the laws of physics, really, and it could simulate particles, fluids, materials. I was looking at the website. It's very well thought out, and I'm very impressed just by this is an incredible platform. So very, very good find there, Mr. Caldwell, Innovation and Tech.
Yeah, we like Nvidia, and I mean, as I said, across the board, well-managed business. Numbers are good. Growth potential is significant. And I got to tell you another thing just quickly about Nvidia is that with this Omniverse, if you really think about everything else that's going on and the transactional layer with commerce, when you talk about fintech or DeFi, there's all this going around, these valuations that are through the roof on these companies, literally. Even I probably could call it a bubble, and that would be okay at this point, right? But their fintech valuations are crazy. But the point is that look at NFTs and look at how NFTs are being represented these days in these gaming platforms, inside the multiverse, inside virtual worlds. And as those worlds get created and those platforms are able to facilitate commerce and transactions, it's sort of this marriage of fintech with the creative side of things. So I think it's really kind of where content context and infrastructure can meet, and creators can do some amazing things there. So I think Nvidia has really hit the nail on the head again with this in that particular area.
Without a doubt, without a doubt. And very lastly, I mean, we have about 3 minutes left, but I definitely wanted to address, the largest crypto hack of 2022 so far, where we have Wormhole. It's a token bridge that allows users to send and receive crypto between Ethereum, Solana, Binance, Polygon, and all of your usual suspects, without the use of a centralized exchange, right? So this is this is very important for our listeners. But this is the largest crypto hack of the year so far, and we're only like 2 months in. And the second largest decentralized finance hack to date. Now, the Wormhole team has offered a $10 million bug bounty for the return of the funds, so to speak. But the hack took place on Solana's side of the bridge, and there are fears that Wormhole's bridge to Terra, so to speak, could be similarly vulnerable. Talk to me, if this continues, right? This is a problem that we're seeing over and over again. It defies the actual trust the blockchain provides itself, on which it is, verified ledger and tracking system. So now what?
Well, I mean, it's like anything else. I think if it's when I was a kid, my dad told me, "Hey, look, if you run into anything that sounds just too good to be true, it probably is." So really look into these things. And I think, the crypto crowd will tell you, and I talk with them almost very regularly, a couple times a week. Very high level people in the crypto crowd, but their idea of these kinds of things is that's okay. That's what crypto is. I mean, it's decentralized. It's not controlled. It doesn't have rules. You can just move from here to here. But that's also the problem with it, is the fact that you're able to do those things makes it inherently more risky from a hack perspective, if you want to talk about hacks, but from an intrusion point of view. And it's much easier to exploit. And any professional hacker will tell you it's much easier to exploit something like that than it is something that has checksum intermediaries in the middle, like a Chainalysis or some technology that's specifically designed to catch these kinds of problems and also to prevent these kinds of hacks from happening. I've even seen in the crypto space recently some basic denial of service DOS hacks that go back, to the 80s, for goodness sakes. These things were developed,
Right.
and they still work today because
Yep.
some of these platforms are so open. So I would just say, buyer beware. We
Buyer
tell
beware.
that. I hear that from Joel Bin, the ODC CEO, Original Digital Corporation,
Yeah.
that's in our private companies fund. He says it all the time about blockchain, junk in, junk out, and he says it all the time about crypto and these peer-to-peer systems and everything. It's really
Yeah.
buyer beware, because they're easily exploited.
Absolutely. Well, listen, thank you so much for coming in and shedding some light on a lot of complicated matters, Paul. It's always very delightful chatting with you.
Hey, same with you, Zen. Take care.
You
Thank you.
got it. That was Paul Caldwell, CEO of Caldwell Soames. Now, guys, as is the case with any new technology, NFTs offer potential for abuse. It's important that as our industry considers all the ways this new asset class can change how we link the blockchain to the physical world, we also build products that make NFT investments as safe and secure as possible. And OG Pay and the original Two Digital Corporation, two companies within the Caldwell Soames portfolio, are doing exactly that. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York. We'll be right back after this.